Talking points: USDJPY BullFlag formation takes shape ahead of more Fed rhetoric. NZDUSD extends bearish sequence ahead of RBNZ policy meeting. Sign up for the DeLifx trading webinars for an opportunity to discuss potential trade setups. USDJPY pairs the decline from earlier this week, with U.S. Treasury yields exhibiting a similar behavior as Federal Reserve officials appear to be on course to further normalize monetary policy over the coming months. Despite the mixed data prints coming out of the U.S. economy, Fed fund futures show a greater than 70% probability for a December rate hike as New York Fed President William Dudley, a permanent fatignomer, anticipates inflation will rise and stabilize around the FOMC's 2% objective. In turn, fresh remarks from Chair Janet Yellen may continue to boost the appeal of the greenback should the central bank head prepare U.S. households and businesses for higher borrowing costs. However, less hawkish remarks from Chair Yellen may drag on the dollar as Fed officials curb the longer-run forecast for the benchmark interest rate, and the dollar yen may largely preserve the broader range from earlier this year, especially as Japan Prime Minister Shinzo Abe plans to dissolve the House of Representatives later this month and hold a snap election in October. USDJPY daily chart: USDJPY may face range-bound conditions as it fails to clear the Fibonacci overlap around 112.40, 61.8% retracement to 112.80, 38.2% expansion, while the relative strength index RSI struggles to push into overbought territory. Nevertheless, a bull-flag formation appears to be taking shape, with apparent risk of extending the rebound from the September low 107.32 as the former resistance zone around 111.10, 61.8% expansion to 111.60, 38.2% retracement offers support. Next topside hurdle comes in around 113.80, 23.6% expansion to 114.30, 23.6% retracement, which sits just below the July high 114.50. NZDUSD struggles to hold its ground ahead of the Reserve Bank of New Zealand's RBNZ September 28 meeting, with a pair at risk for further losses as it extends the series of lower highs-lows from the previous week. With New Zealand now facing a hung parliament, the RBNZ may show a greater willingness to carry the record low interest rate into 2018, especially as the New Zealand Institute of Economic Research's NZIER Monetary Policy Shadow Board continues to recommend the Reserve Bank leave the official cash rate on hold. In turn, the RBNZ may merely attempt to buy more time and reiterate that numerous uncertainties remain, and policy may need to adjust accordingly as Deputy Governor Grant Spencer takes the helm. Keep in mind the RBNZ has argued that a lower New Zealand dollar is needed to increase tradables inflation and help deliver more balanced growth, but the comments may largely be ignored unless the central bank opens the door to intervene in the currency market. NZDUSD daily chart created using TradingView. Even though NZDUSD has negated the risk of a head and shoulders reversal, downside targets are coming back on the radar following the failed attempt to test the 0.7470 50% expansion region as the pair carves a bearish sequence. Break close below the Fibonacci overlap around 0.7190 50% retracement to 0.7200 38.2% retracement to may spur a run at the 200-day SMA 0.71450, which sits above the monthly low 0.7144, with the next region of interest coming in around 0.7100 38.2% retracement to 0.7110 38.2% expansion. Click here for the DeLifx calendar written by David Song, currency analyst. To contact David, email dsong@delifx.com. Follow me on Twitter at @davidsong. To be added to David's email distribution list, please follow this link.